Top 25 Treasury Analyst Interview Questions and Answers. Preparing for a Treasury Analyst interview requires strong knowledge of financial management, cash flow analysis, risk control, and banking operations. Employers look for candidates who can manage liquidity, monitor financial risks, support investment decisions, and maintain accurate financial reporting. A well-prepared candidate demonstrates analytical thinking, attention to detail, and understanding of Treasury systems and financial markets. This guide provides 25 commonly asked Treasury Analyst interview questions with professional sample answers. Each response is designed to help you communicate your skills confidently, explain technical concepts clearly, and present yourself as a capable financial professional ready to support organizational financial stability. 1. Tell us about yourself and your experience as a Treasury Analyst. I am a finance professional with strong experience in cash management, financial analysis, and banking coordination. My background includes monitoring daily cash positions, preparing cash forecasts, and supporting liquidity planning. I have worked with Treasury management systems and collaborated with accounting and finance teams to ensure accurate financial reporting. I focus on minimizing financial risk while maximizing efficient use of funds. My analytical skills help identify trends and improve decision-making. I am highly detail-oriented, organized, and comfortable working with deadlines, making me confident in supporting Treasury operations effectively and contributing to overall financial stability. 2. What are the main responsibilities of a Treasury Analyst? A Treasury Analyst is responsible for managing cash flow, maintaining liquidity, monitoring banking activities, and supporting financial risk management. Key duties include preparing cash forecasts, reconciling bank accounts, managing payments, and ensuring funds are available for operational needs. The role also involves analyzing financial data, assisting with debt management, monitoring foreign exchange exposure, and ensuring compliance with financial policies. Treasury analysts work closely with finance teams and banks to optimize cash utilization. Their goal is to protect company assets, reduce financial risks, and improve efficiency in financial operations while supporting strategic business decisions. 3. How do you manage daily cash positioning? Managing daily cash positioning involves reviewing bank balances, incoming receipts, and scheduled payments to determine available liquidity. I begin by collecting bank data from all accounts and consolidating it into a cash position report. Then I analyze cash inflows and outflows to ensure sufficient funds for obligations. If shortages appear, I coordinate fund transfers or short-term financing solutions. I also monitor payment priorities and maintain communication with accounting teams. Accurate daily cash positioning helps prevent overdrafts, reduces borrowing costs, and ensures the organization maintains operational continuity while optimizing cash utilization. 4. What is cash forecasting and why is it important? Cash forecasting estimates future cash inflows and outflows to maintain adequate liquidity. It helps organizations plan payments, investments, and financing decisions. I prepare forecasts using historical data, expected revenues, expenses, and seasonal trends. Regular updates ensure forecasts remain accurate. Effective forecasting allows companies to avoid cash shortages, minimize idle funds, and make informed strategic decisions. It also supports risk management and budgeting processes. By identifying potential gaps early, Treasury teams can arrange financing or investment opportunities, ensuring smooth financial operations and improving overall financial planning efficiency. 5. How do you minimize financial risk in Treasury operations? Minimizing financial risk requires strong internal controls, diversification, and continuous monitoring. I analyze exposure to currency fluctuations, interest rate changes, and counterparty risks. Implementing hedging strategies, maintaining diversified banking relationships, and monitoring credit limits help reduce exposure. Regular reconciliation and compliance checks prevent operational errors. I also ensure policies are followed for payments and investments. Data analysis and forecasting help anticipate risks before they impact operations. Effective communication with management ensures timely decision-making. A proactive risk management approach protects company assets and strengthens financial stability. 6. Explain liquidity management. Liquidity management ensures an organization has enough cash or easily convertible assets to meet short-term obligations. I monitor cash balances, forecast cash needs, and optimize fund allocation across accounts. Surplus cash may be invested in short-term instruments, while shortages require borrowing or fund transfers. Efficient liquidity management reduces financing costs and improves operational efficiency. It involves coordinating with finance teams, banks, and management to align cash availability with business goals. Maintaining optimal liquidity ensures the company operates smoothly without unnecessary borrowing or idle cash balances. 7. How do you handle bank reconciliations? Bank reconciliation involves comparing company records with bank statements to identify discrepancies. I review transactions, verify deposits, match payments, and investigate unmatched entries. Differences may result from timing issues, bank charges, or recording errors. I document adjustments and ensure corrections are recorded promptly. Accurate reconciliation prevents fraud, improves financial accuracy, and strengthens internal controls. I perform reconciliations regularly and maintain organized documentation for audits. Consistency and attention to detail ensure reliable financial reporting and help maintain strong relationships with banking partners. 8. What treasury management systems have you used? I have experience using treasury management systems to monitor cash balances, automate payments, and generate financial reports. These systems help consolidate banking data, improve forecasting accuracy, and streamline workflows. I use them to track liquidity, manage investments, and ensure compliance with treasury policies. Automation reduces manual errors and increases efficiency. I am comfortable learning new systems quickly and adapting to company-specific tools. Leveraging technology enhances transparency, reporting accuracy, and decision-making within treasury operations while saving valuable time for analytical activities. 9. How do you manage foreign exchange risk? Foreign exchange risk arises when transactions involve multiple currencies. I monitor currency exposures by analyzing payables, receivables, and international operations. To mitigate risk, I recommend hedging strategies such as forward contracts or natural hedging through currency matching. Regular market analysis helps anticipate exchange rate fluctuations. I also collaborate with finance teams to plan currency conversions strategically. Maintaining clear policies and monitoring exposure limits ensures controlled risk levels. Effective foreign exchange management protects profit margins and stabilizes financial performance in global business environments. 10. Describe your experience with financial reporting. Financial reporting involves preparing treasury reports such as cash flow summaries, liquidity analysis, and debt schedules. I compile accurate financial data from banking systems and accounting records to create reports for management. These reports support strategic decision-making and regulatory compliance. I ensure data accuracy through reconciliations and validation checks. Clear reporting highlights trends, risks, and performance indicators. Strong reporting skills help management understand financial positions and make informed investment or financing decisions. Transparency and accuracy are essential components of effective treasury reporting. 11. How do you prioritize multiple deadlines? I prioritize deadlines by assessing urgency, financial impact, and business importance. I maintain structured schedules and task lists to manage daily responsibilities efficiently. Critical tasks such as payments and cash reporting receive immediate attention. I also communicate proactively with stakeholders to clarify priorities and expectations. Using automation tools and planning ahead reduces last-minute pressure. Staying organized allows me to handle multiple deadlines without compromising accuracy. Effective time management ensures treasury operations run smoothly and all financial obligations are met on time. 12. What key metrics do you monitor in treasury? Important treasury metrics include cash balance levels, liquidity ratios, borrowing costs, investment returns, and forecast accuracy. I also monitor working capital trends, bank fees, and payment cycle efficiency. Tracking these indicators helps evaluate financial performance and identify improvement opportunities. Regular analysis allows treasury teams to optimize funding strategies and manage risks effectively. Monitoring metrics supports data-driven decisions and enhances financial control. Consistent review ensures alignment between treasury operations and organizational financial goals. 13. How do you ensure compliance with financial policies? I ensure compliance by following established treasury procedures, documenting transactions carefully, and conducting regular reviews. Segregation of duties, approval workflows, and audit trails prevent unauthorized transactions. I stay updated on regulatory requirements and internal policies. Training and communication with team members reinforce compliance awareness. Regular internal audits and reconciliations help identify potential issues early. Maintaining compliance protects the organization from financial penalties, fraud risks, and reputational damage while supporting transparent financial operations. 14. Describe a time you improved a treasury process. In a previous role, I identified inefficiencies in manual cash reporting. I introduced automated data extraction from banking portals into standardized spreadsheets. This reduced reporting time significantly and improved accuracy. I collaborated with IT and finance teams to implement validation checks and reporting templates. The improvement allowed management to receive faster financial insights and enhanced decision-making. Continuous process improvement is important because treasury operations require speed, accuracy, and reliability. Small operational enhancements can create significant organizational benefits. 15. How do you work with banks and financial institutions? I maintain professional relationships with banks by communicating regularly, monitoring service performance, and negotiating favorable terms. I coordinate account management, payment services, and financing arrangements. Clear communication ensures timely resolution of issues such as transaction delays or fee discrepancies. I also review banking products to identify opportunities for cost savings or operational efficiency. Strong banking relationships improve access to financing options and financial solutions. Collaboration with financial institutions supports smooth treasury operations and enhances organizational financial flexibility. 16. What is working capital management? Working capital management focuses on managing current assets and liabilities to maintain operational efficiency. I monitor receivables, payables, and inventory cycles to optimize cash flow. Improving collection processes and negotiating payment terms help strengthen liquidity. Effective working capital management reduces borrowing needs and improves profitability. Treasury plays a key role by analyzing cash conversion cycles and supporting operational teams. Maintaining balance between liquidity and operational requirements ensures sustainable financial health. 17. How do interest rates impact treasury decisions? Interest rates influence borrowing costs, investment returns, and financial risk exposure. Rising rates increase debt expenses, while falling rates may reduce investment income. I monitor market trends and evaluate fixed versus variable financing structures. Treasury decisions such as refinancing or hedging depend on interest rate expectations. Analyzing rate movements helps optimize funding strategies and manage risk exposure. Understanding economic conditions allows Treasury professionals to support strategic financial planning effectively. 18. Explain short-term investments in Treasury. Short-term investments allow organizations to earn returns on surplus cash while maintaining liquidity. Common instruments include Treasury bills, money market funds, and short-term deposits. I evaluate investment options based on safety, liquidity, and yield. Risk assessment ensures funds remain accessible when needed. Diversification reduces exposure to market risks. Effective short-term investment management balances profitability with capital preservation, supporting financial efficiency without compromising operational cash requirements. 19. How do you handle payment processing controls? Payment controls protect against fraud and errors. I follow approval hierarchies, dual authorization processes, and secure banking platforms. Transactions are verified before execution, and access rights are carefully managed. Regular audits and reconciliations ensure payments match approved invoices. Automation and segregation of duties strengthen internal controls. Maintaining strict payment procedures safeguards company funds and builds trust with stakeholders, while ensuring operational accuracy. 20. Describe your analytical skills. My analytical skills involve interpreting financial data, identifying trends, and providing actionable insights. I analyze cash flows, financial ratios, and market conditions to support Treasury decisions. Advanced spreadsheet functions and data visualization help present information clearly. Analytical thinking enables me to detect risks, optimize liquidity, and improve financial performance. Strong analysis supports strategic planning and enhances operational efficiency within Treasury management. 21. How do you manage confidential financial information? Handling confidential information requires integrity, secure systems, and adherence to company policies. I limit access to sensitive data, use encrypted platforms, and follow confidentiality agreements. Documents are stored securely and shared only with authorized personnel. Maintaining discretion protects company strategy and financial stability. Ethical behavior and strong internal controls ensure data security and regulatory compliance while maintaining organizational trust. 22. How do you respond to unexpected cash shortages? When facing cash shortages, I immediately review forecasts and identify causes such as delayed receivables or unexpected expenses. I prioritize critical payments and arrange internal fund transfers if possible. Short-term financing or credit facilities may be used when necessary. Communication with management ensures quick decision-making. Proactive monitoring and contingency planning help minimize operational disruptions. Rapid response and accurate analysis are essential during liquidity challenges. 23. Why do you want to work as a Treasury Analyst? I enjoy roles that combine financial analysis, strategic thinking, and operational responsibility. Treasury analysis allows me to contribute directly to financial stability and business success. I am motivated by managing liquidity, optimizing cash flow, and supporting risk management strategies. The position aligns with my analytical strengths and interest in financial markets. I value opportunities to improve processes and collaborate across departments. Working as a Treasury Analyst enables me to apply technical knowledge while contributing meaningful financial insights to organizational growth. 24. What challenges do Treasury Analysts commonly face? Common challenges include cash flow volatility, market fluctuations, regulatory changes, and operational risks. Treasury Analysts must balance liquidity needs with investment opportunities while managing uncertainty. Rapid decision-making is often required under pressure. Technology integration and accurate forecasting can also be challenging. Strong analytical skills, communication, and adaptability help overcome these issues. Staying informed about market trends and maintaining structured processes allows Treasury professionals to navigate complex financial environments successfully. 25. Where do you see yourself in 5 years? In 5 years, I aim to grow into a senior Treasury or finance leadership role. I plan to deepen my expertise in liquidity management, financial risk analysis, and strategic Treasury planning. Continuous learning through certifications and professional development will strengthen my technical knowledge. I hope to contribute to major financial decisions, lead process improvements, and mentor junior team members. My goal is to become a trusted financial advisor who supports long-term organizational growth and financial excellence. A successful Treasury Analyst combines financial expertise, analytical thinking, and strong communication skills. Interview preparation helps candidates confidently demonstrate their understanding of cash management, liquidity planning, risk mitigation, and financial reporting. The questions and answers in this guide provide practical insights into what employers expect from Treasury professionals. By practicing structured responses and understanding key Treasury concepts, candidates can present themselves as reliable and knowledgeable finance specialists. Strong preparation not only improves interview performance, but also builds confidence to succeed in a dynamic and highly responsible Treasury career.